Welcome back to the channel, all of my SoFi hodlers. I hope you guys are having a great day and you are ready for some gains because we do have SoFi earnings coming on March 1st. Obviously, that is not a guarantee, but I think it's pretty clear we are going to see some good guidance, we're going to see some good revenue numbers, and we're going to see a lot of enthusiasm around SoFi stock. We can see that institutional investors have been loading up on SoFi options, which if you're buying options, you have to see the price of the stock going up or they could potentially expire worthless. And to be more clear on that, even on Friday, we've seen an 83% positive order value. And over the past week, even though it's been extremely volatile, SoFi stock has fallen a lot, even down to under $9 per share. The positive order value was 68%. That is massive. That is even more than something like Apple. You don't even see those kind of numbers on Apple. So I think that shows a lot, and I think it really sets the tone for how institutional investors are feeling about SoFi. I want to give you guys some breaking news as well that is coming out. You guys will not want to miss this because it will affect the markets. And I want to go over how it will affect the markets as well as what the markets are pricing in for the Fed coming on March 16th. And then ultimately, I do want to end off this video going over the technical analysis, going over obviously this breaking news. You kind of have to dig into it a little bit, which I will get into, but I also want to go over how I plan to trade SoFi earnings. So let's get into this video. If you guys find value out of it, or if you just want to stay up to date with the most in-depth, comprehensive data and information around SoFi, hit the like button, number one, subscribe to the channel, number two, and comment down below, what do you think about earnings for SoFi stock number 3? So getting into this video, the breaking news, the holy grail of sanctions is coming on Russia. This is the worst sanction a country can get. And a matter of fact, in the history of this sanction, only 2 countries have ever received this. Number 1 being Iran, number 2 being North Korea. So you're putting Russia in the same category as those other 2 countries. And it's going to be an all bad situation. And exactly what this is, it is being disconnected from the SWIFT platform. It says Russia will be disconnected from the international payment system SWIFT. The official decision has not yet been formalized, but technical preparations for the adoption and implementation of this step have already begun, said Ukrainian Foreign Minister, I'm not even going to try to say that, I'm going to butcher it, on his Facebook page. So this is the holy grail of sanctions. And if you guys are unaware what SWIFT is, the Google definition says SWIFT is a vast messaging network used by banks and other financial institutions to quickly, accurately, and securely send and receive information such as money transfer instructions. More than 11,000 SWIFT member institutions sent over 35 million transactions per day through the network in 2020. And for a better reference to exactly what this is and why it is so important and what implications it will have for the markets, this affects trade. So your imports, your exports from country to country are done through the SWIFT network. That is the Sweden network. So if the EU, it looks like this is confirmed, they will come out and say, hey, you're no longer able to use this. So essentially, Russia, when they try to export their vodka or their wheat products or whatever else, they're not going to be able to use the SWIFT payment network. Sure, could they go around this? Yes, but it's not secure and the cost would be much higher and it will delay everything substantially. Same thing for imports and exports to other countries like the UK, Germany, Poland, France, as well as us. Fortunately, America does not use SWIFT as much with Russia. We don't do much trading with Russia. So, we should be less impacted, but really the countries that are going to be impacted the most is the European Union countries, Europe over there, countries around the world. And that's going to have a big impact on the markets because every time President Joe Biden would speak and not talk about SWIFT and say that it was off the table, the stock market would fall heading into that speech, and then the markets would rally as soon as Biden would say, we're not going to sanction SWIFT yet. We're not going to cut Russia off from SWIFT. The markets would rally because the markets, they only care about financials, numbers, and all of that. And SWIFT is going to be a big drag on a lot of countries, but especially Russia. And we know a lot of foreign debt is held in Russian government bonds. In 2019, JP Morgan called government debt bulletproof for Russia, obviously. Why? Because Russia only has 18% debt to GDP, whereas America, for reference, has 140% debt to GDP, and Japan has 236% debt to GDP. Russia is seen as a safer place to invest before this nightmare happened in Ukraine, which Ukraine is also kicking their ass. So shout out to Ukraine, definitely showing a lot of heart and showing the world how to fight a bigger country, doing a lot of good over there. But I don't want to get into the politics too much. I know some people are like, Russia, they aren't the bad guys here. I don't care. I don't like Russia. I don't like the bully they are being. And Russia and, well, Ukraine is kicking their ass. So enough with that. You're probably going to see a negative market on Monday. It's very possible we could gap down and then rally throughout the rest of the day. That's usually how our markets have been playing out. We gap down and then rally throughout the end of the day as retail investors start to come in and buy the dip. About 80% of retail buying on Friday in the mornings and Thursday in the morning, that big day, that 6% day that was on Thursday, it was done by retail investors that started to buy everything, and then institutional investors followed suit. That was reported to us by Bloomberg and Reuters. So that's the scoop as far as that is concerned. Expect a pretty red day on Monday, and in my opinion, you're going to see a rebound. And SoFi, they do have earnings. So you see right here, SoFi, AMC as well, earnings. It's going to be a pretty exciting day on Tuesday, and SoFi does have a lot of short interest and a lot of that bullish option activity, so it's looking to be very good. And after we get through this data, I want to go over how I plan to specifically trade SoFi, but I also want to go over the short interest, because if we do have a very bullish earnings, which I think it's implied to us that we will, you could see some shorts forced to cover as a lot of liquidity is actually drying up. So the short interest of free float is 17.37%. Current shares that are sold short of 111.16 million. Cost to borrow max of 2.32%, and the utilization is 100%. Days to cover is sitting at 3.01. So this is looking beautiful for a potential short squeeze and could add gasoline to an already lit fire coming on earnings, in my personal opinion. So that is that. As far as the federal funds rate expectations, keep this in mind. You're also seeing the federal funds rate expectations basically getting more hawkish over the weekend. On Friday, we did see 20.1% of market participants expected to see a 0.25% rate hike. Now we are sitting at 24%. So the higher this number goes, this top line, the 0.5% rate hike, the more potentially red you're going to see in the markets, especially heading into that March 10th CPI reading. If you guys are unfamiliar, CPI stands for Consumer Price Index. That is the essentially the broad metric of assessing inflation, CPI, and that comes out March 10th. The Fed meeting is March 16th, exactly 2 weeks, 3 days, 22 hours, and 10 minutes away. I love how specific they are, and that's at 2 p.m. March 16th, and this is all going to be very important. I do expect the Fed to only do that 0.25%, so I think that'll be a reason for the markets to actually rally. And something else I want to point out as far as the whole SWIFT situation is this. SWIFT Bank UBS cuts value of Russian bonds to zero, sparking margin calls. So you've seen that S&P, the rating company, downgraded Russian debt to zero. You've seen Moody's that said they are on the verge of downgrading their debt to zero as well. Now that SWIFT is actually going to be approved and passed, then it looks like you're going to see Moody's as well downgrade the Russian debt to junk, to basically zero, and you're going to see more margin calls across the board because, like I said previously, Russian debt was seen as bulletproof because they had a very low debt to GDP ratio, the lowest of most countries. I don't think there's any other countries that are really lower than that. Might be a couple here and there, but that is a really good ratio right there, and that's why a lot of people like to buy government bonds from Russia, or they used to at least. About $64 billion of American money was actually held in Russian government bonds. So that's going to have a big effect on things. As far as other earnings that are notable, you do have Wednesday in after hours. You have American Eagle, ChargePoint, and Snowflake. Thursday before open, Best Buy, Kroger, TD Bank, Big Lots, Billy Buy. I don't know how to say that, and I don't know what the ticker is, but I've seen that before. A lot of people do pay attention to that one. Costco Thursday and after hours. Gap as well. Those are going to be also big ones. Smith & Wesson could be interesting as well, given all the tensions we have going on around the world, and that will be interesting. I might actually want to trade that one. That one could be really good, a matter of fact. Now, let's get into exactly how I plan to trade SoFi earnings, and then let's talk about the technical analysis here. So SoFi is sitting at $10.60 per share. I'm down about 32.67%, so it's not looking too good. My average cost of $15.74, down about $2,000. So could be a lot better. Could be a lot better. We'll just say that. But what I plan to do as far as trading SoFi earnings is essentially what I might do is say, hey, buy 5 of these $12 calls if SoFi is bullish on Monday. If SoFi is bullish, then I might buy these calls, right? So you're buying 5 contracts. So every dollar it moves up, you will make $5 because you own 5 contracts. It goes up $1. You make $5 for every dollar these contracts go up. If SoFi has a very bullish day, these contracts with the IV that is implied with them, which is probably like 80% or so, maybe 100%, then you will see that go up a lot. You will see the price of these contracts go up a lot, especially if the markets are down, and then we do tend to go positive throughout the rest of the day, like we have seen over the past couple very volatile trading days. And then this is the key. If you can buy these for $280 and say these contracts go to $100 a piece, which would be very possible, then I would sell 3 of them, get $300 back, and keep 2 of them for free heading into earnings. That's my main strategy that I like to do. The only thing you really have to make sure of is that you have a clear direction. You have to make sure that the markets are not going to dump on you, which is very hard to do in this environment. This strategy works a lot better in a more docile environment where if a stock is up a lot, good news, heading into earnings, it's likely to continue to rally into those earnings. It could go either way at this moment. So just be very mindful of that. Don't risk anything you are unwilling to lose. You could do this on a smaller basis as well. You could buy 2 of these, spend $100. If these contracts go to 100 or close to that, even if they go to 80, you could sell one. Now you have a virtually free trade to play SoFi earnings, or you could just buy the stock, which definitely, if you look at my position, it was about almost $7,000, about 10.63% of my portfolio, 425 shares. You can tell I'm a big fan of just buying the stock in SoFi as well. I think they will be very good. As far as the technicals are concerned, and what is important to know, we have a lot of support at $10 per share, so I don't see us actually falling on earnings in a dramatic way. A lot of this bad news is already priced in, and that's also a reason why Square did rally so hard on their earnings, 26%, is because a lot of their bad news as well has already been priced in, going from almost $300 a share down to $82 per share. It's hard to keep pushing a good company down, and SoFi is a good company that is beaten into the ground. So what would I expect coming on SoFi earnings if they are really good? Well, I think a move to $14 per share is definitely not off the table. We would have to break out above the 50-day moving average at $11.70 per share, which could be relatively easy. The 100-day moving average at $13.16, and then that $14 level. If we break out above 14, you're going to see some resistance around 16.23, and that would just be a wild move nonetheless. But it is possible if SoFi does impress investors the way it looks like they will, even considering hedge funds, institutions that are buying these large option trades on SoFi stock in massively positive amounts, right? Then, I don't think it's too crazy to think that they have more information than us. Matter of fact, I know they do. And it definitely could be a sign of what is to come coming on SoFi earnings. You see a lot of the $10.50 strike calls that are being purchased for March 4th. So that could also be another good way to trade their earnings. Let's take a look at exactly what those are actually going for. The 1050 calls for $100, break even of about 8%. So they're implying a decently good move coming on Monday, if not on Tuesday, on their earnings. So that's going to be very important. That's what you need to know as far as technicals. The Bollinger Bands, the 20-day simple moving average, well, is at about the 50-day moving average, still at around $11.81 per share. So important levels we need to break out above. I do overall think it's going to be bullish. Volume has been very high. The MACD, unfortunately, is bearish. The yellow line is below the blue line, but I think it won't be very hard to see a lot of that bullish activity and to push that MACD back in positive territory. Now let's also take a look at the RSI. I actually don't have it pulled up right now, but it'll be easy to pull up. This is the relative strength index. So you're not seeing a lot of relative strength. That means you could see a rally to the upside before, SoFi would get to overbought territory. And we were really only in overbought territory a couple times in SoFi's history when we did hit those peaks. That $28 peak, this one right here at about $25 and another one about $25. You were a little bit oversold or overbought both or all three of these times, but we've remained at this, oversold level for a while now. So to see a move up, definitely in the cards as far as I am concerned. So that's going to be all for this video. Hit the like button if you guys like to make money. Subscribe to the channel if you want to stay up to date with the most in-depth, comprehensive data around SoFi stock. Any news that you need to know that is going to make you money. Thank you guys for watching. Check out the link down below in the description of this video to get yourself some free stock in Webull, Moomoo, and Public. They do not use payment for order flow, and they will give you 5 free stocks if you deposit $100 with Webull and Moomoo. Worst case scenario, you get some free stock and you sell that and buy yourself some SoFi. Literally free money. Not too often you get some free money, so take advantage of that. If you guys want to come trade with me and join a trading community, link down below in the pinned comment as well. Thank you guys for watching, and I will see you in the next one.